When the economy takes a downturn, millionaires don't just sit back and worry. They make strategic moves to protect and grow their wealth. Curious about what the wealthy are investing in to survive and even thrive during a recession? From smart assets to essential purchases, these buying habits reveal how millionaires stay ahead when times get tough. In the next few minutes, we'll uncover what savvy investors are putting their money into right now, and what you can learn from their playbook to safeguard your own financial future. Today we will talk about surviving the next recession, what millionaires are buying now. So before we start, make sure to hit the like button and subscribe to my channel. 1. Preparing for the storm. As economic downturns loom, millionaires tend to recalibrate their financial strategies, focusing on preserving wealth rather than aggressive growth. Preparing for the next recession starts with liquidity, having ready cash or cash equivalents to capitalize on opportunities or buffer against losses. This means shifting some assets into safer, more liquid investments, such as treasury bills or money market funds, which provides safety and flexibility. Unlike the average investor who might panic sell during volatility, millionaires strategically increase their cash reserves, enabling them to buy undervalued assets at a discount. They'd also diversify portfolios more cautiously, avoiding overly risky sectors like high-growth tech stocks that often face sharp corrections during recessions. Additionally, they review their debt levels, preferring low-interest, manageable debt, or paying down liabilities to avoid financial stress when credit tightens. 2. Real estate resilience. Real estate is a favored asset among the wealthy during economic downturns, but not all properties are equal. Millionaires tend to invest in prime locations, such as major metropolitan hubs or vacation hotspots, with strong long-term demand. They often focus on multifamily residential units or commercial real estate with reliable tenants, which can provide steady cash flow even in tough times. Additionally, distressed real estate presents opportunities. Properties undervalued due to market panic can be acquired below replacement cost, offering significant appreciation potential once the economy recovers. Another trend is investing in real estate investment trusts, REITs, focused on recession. Resilient sectors like healthcare facilities or logistics warehouses, which remain essential regardless of economic cycles. Wealthy investors also look for properties that can be repurposed or improved to increase value, leveraging their access to capital and expertise to create profitable turnaround stories. 3. Precious metals and tangibles. Gold and silver have historically been safe havens in economic turmoil, and millionaires continue to buy these tangible assets to hedge against inflation and currency fluctuations. Unlike paper assets, precious metals retain intrinsic value, making them a reliable store of wealth when stock markets tumble or governments increase money supply. Wealthy investors often diversify holdings across physical bullion, coins, and even mining stocks, which can outperform during inflationary periods. Beyond metals, tangible luxury assets like classic cars, fine art, and rare collectibles have gained attention. These items often appreciate independently of financial markets and can serve as alternative investments with intrinsic cultural or aesthetic value. Millionaires tend to buy these tangibles selectively, focusing on items with proven historical appreciation and strong market demand, ensuring liquidity and potential upside, even in recessionary climates. 4. Defensive stocks and dividends. During recessions, certain industries, called defensive sectors, maintain stable earnings and continue to pay dividends, attracting millionaire investors seeking reliable income. These include utilities, consumer staples, healthcare, and telecommunications. Wealthy individuals tend to increase allocations in these stocks because they offer less volatility and steady cash flows, cushioning portfolios against economic shocks. Dividend aristocrats, companies with long histories of dividend growth, are particularly attractive since their payouts often increase even in tough times, providing income streams that can offset losses elsewhere. Moreover, millionaires carefully assess company balance sheets to avoid businesses with excessive debt or cyclical exposure. 5. Alternative investments. Alternative investments, such as private equity, hedge funds, and venture capital, offer millionaires avenues to generate returns uncorrelated with public markets. During recessions, wealthy investors often increase exposure to alternatives that focus on distressed assets, turnaround opportunities, or niche markets insulated from economic cycles. Private equity funds targeting undervalued companies can negotiate better terms and drive operational improvements, unlocking value not apparent in public equities. Hedge funds employing strategies like market-neutral, long-short equity, or global macro help manage risk while capturing opportunities across asset classes. Venture capital, while riskier, may focus on recession-resistant sectors like healthcare technology or essential services. 6. Cash and safe bonds. Despite low yields, cash and government bonds remain core defensive holdings for millionaires facing recession risks. High-quality bonds, especially U.S. Treasuries, offer safety, liquidity, and predictable income, serving as portfolio anchors when equity markets fall. Many wealthy investors increase bond allocations before or during recessions, benefiting from price appreciation as interest rates drop. They also hold cash equivalents, ready to deploy when attractive bargains emerge. Millionaires understand the importance of a laddered bond portfolio, staggering maturities to manage interest rate risk and ensure ongoing liquidity. Moreover, they may diversify into inflation-protected securities, Type PS, to guard against rising prices. 7. Essential commodities and energy. Commodities like oil, natural gas, and agricultural products are increasingly considered by millionaires preparing for economic downturns. While volatile, these essential commodities underpin global supply chains and remain in demand regardless of economic cycles. Wealthy investors often gain exposure through commodity futures, stocks in energy producers, or specialized ETFs. Energy infrastructure assets, such as pipelines and storage facilities, also attract attention due to stable cash flows from long-term contracts. Some millionaires invest in renewable energy projects or companies, anticipating both government support and increasing demand for sustainable solutions. Additionally, owning stakes in food production or agribusinesses offers inflation protection and exposure to essential goods, which are less sensitive to recessions. 8. Investing in knowledge and networks. Beyond tangible assets, millionaires invest heavily in their knowledge and networks to navigate recessions effectively. This includes accessing premium financial advice, attending exclusive conferences, and building relationships with industry insiders. Informed decision-making allows them to identify emerging trends, regulatory changes, and undervalued opportunities ahead of the broader market. Many also invest in ongoing education, learning about new technologies, macroeconomic shifts, and geopolitical risks, to adapt strategies dynamically. Networking with other high-net-worth individuals and experts provides valuable insights, co-investment opportunities, and support during market turbulence. This intellectual capital is a powerful asset that helps millionaires anticipate recessions, act decisively, and maintain a competitive edge. Ultimately, their ability to leverage both financial resources and knowledge distinguishes them from average investors, enhancing resilience and long-term wealth preservation. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.